So I'll have the first speaker joining. Before he starts, I'm going to tell you that Greg Alexander, we met as value builders. As I told you, value builders and what I'm doing in the Arab world, because I'm the first one in the Arab world doing it and still the only one mainly. We help entrepreneurs, actually business owners, increase the value of their business before getting investment or selling it. Also in the process, they are able to scale the business and know how to do it. And by doing all this, they can gain their freedom back. That's why I'm going to share also the link for the Freedom Workshop, just for you to know what we talk about. I interviewed a couple weeks ago 36 business owners who worked with me on this, and they shared what they benefited from and how they applied it in their business, and actually how it helped them survive during the crisis. So Greg Alexander, my friend, welcome.
Hello, Andre. How are you?
Boomba, how are you doing? How's your energy?
Very, very well. Lots of energy. We need to have lots of energy in Scotland at this time of year because it's about 1 degree outside. Very dark, very cold. So I'm not looking for sympathy. I'm just telling you how it is.
Great. Thank you, Greg, for joining. I'm happy that you directly said yes when I asked you if you would like to be one of our speakers. And I know you have a lot of value to deliver to our community. I would like you to start by introducing yourself and then go directly to your session. Here's the speaker view, or the screen is for you. Go.
Great. Thank you, Andre. I'll talk a wee bit more about my background as I'm running through the slides. Basically, chartered accountant by training. I've never looked back in terms of performance of a business. I'm always looking forward. I'm always focusing on value and the commercial side of businesses. So now I provide part-time finance director roles, CFO roles, and I also, as Andre said, I'm involved in Value Builder. I work with people on a one-to-one basis or on a group basis or in our mastermind groups. And the focus for me is always on building value and generating cash. So today I'm going to talk about mastering cash flow for business owners, which will be challenging in 15 minutes, but hopefully I can give you a few little tips, a few little nuggets that will help you as we move on. And we'll have a free gift there as well, which I'll talk about as well. So I'm going to share my screen if Andre permits me.
Done.
Thank you, Andre. So I've got a presentation here that I'll run through. I'm not going to bore you with lots of slides. So here we go. So just to give you a feel for what we're going to talk about today is my background very briefly. What do I do? Who do I do it for? Why cash is important. I'm going to give you 5 key cash flow tips. Now they'll be a bit wider than one sort of small tip, but there are 5 key things I think you should be focused on. I think we'll have some time for some Q&A, or Andrew will perhaps ask me some questions, and that will do us for the session as it is. I'm just going to bear with me 1 second till I move my screen. So, as I said, my background, I'm a Scottish chartered accountant by training. I qualified in 1994, which is quite frightening because that's many years ago. It makes me feel very old. I spent a fair amount of my time then doing corporate finance related work because I quite quickly realised I didn't like doing audit. I didn't like looking back. I was more interested in how businesses moved forward and how they grew value. And as part of that, I then moved into private equity and venture capital. So I spent 6 years in investing money on behalf of banks and institutions, and I learned an awful lot during that time. I then pulled all of that together by spending 18 months in an industrial financial management role. So it was a financial controller role for a company that had very low turnover, only turned over about £3 million, and it manufactured valves. And it had just been sold to a New York Stock Exchange listed company. So I had the benefits of working for a small organization, learning how to do all the day-to-day cash flow management, financial management, but I also had the advantage of the big company mentality. So we had to do 3-day flash figures, we had to do 5-day full reports that were 50 to 60 pages, and I had to go out and report to the main board on a quarterly basis. So during that 12 months, I actually learned more than I had in the previous 10 years. So now I focus on my two companies. I have two companies. One focuses on the CFO and the finance raising side of the business, and the other one, Excola 33, is focused on Value Builder and is on mastermind and one-to-one coaching. So the people I worked for, I work for owner-managed businesses, typically turning over between 1 million and 20 million, and many of them have aspirations to grow. And the key thing for all of them is cash. So whilst they're all at different stages, whilst they're all in different sectors and in different industries, the common theme is cash. Now, some of these clients are university spin-outs that have developed intellectual property that we're taking out, and we're building a management team, we're raising money, and we're trying to do something very special. So some of these companies are likely to be worth hundreds of millions going forward, but in the early days, the focus is on cash. We've got other early stage companies that have either gone through that process or are still sometimes pre-revenue, and again, the focus is on cash. We have growing companies, so they're going from maybe 1 million to 2 million to 5 million to 10 million, and again, the focus there is on cash. And we've then got companies who are looking to grow in value and look to exit and bring in new teams. So the shareholders then are looking for a return on their money, and again, that involves cash and cash coming out of the business. So I think as we'll see, cash is important. You know, there's a saying, cash is king, and it's like all of these old sayings, it's there for a reason. So if we can talk about why cash is important, there is a difference between profit and cash. Cash, for me, cash flow management isn't difficult. It's about it's just about being organized, it's about preparing, and it's about understanding these different things. So if you look at the difference between profit and cash, if we make a sale today, we can realize profit. So the profit relates to the sale, less the cost of that sale, less any overheads in the business. And if we make the sale today, that sale is crystallized today. But if we give our customer or client a 30-day credit or 60-day credits, we don't actually collect the cash for 60 days. So there's a timing difference here. And that's where a lot of businesses go wrong, because during that time, we still need to pay our employees, we still need to pay rent, we need to pay utilities, we need to pay other suppliers. So there needs to be a real focus on cash flow in order to survive for that period from making the sale up until the period where we actually generate we receive the cash. Now, profitable businesses can't survive without cash. That seems fairly obvious, but there's a statistic from a Fin Pacific study, which is on the dryrun.com website, and it says that 70% of businesses that fail were actually profitable when they closed. 70%. For me, that's a staggering statistic. Another one from an Intuit study is that 44% of businesses that ran out of cash were surprised. Again, I'm staggered by statistics like that, because I don't see how you can be surprised if you're doing the things that you should be doing. For me, for me, cash is the oxygen that keeps the business alive. And I'll go back to the thing I started with. Cash is very much king for me. So it's also the thing that keeps business owners awake at night. I'm guessing we'll have a number of business owners in here, and many of you will have worried about how do you pay your employees, how do you pay your suppliers, because that's the thing that you're probably not experienced in. You'll be used to running your business from an operational perspective, but perhaps cash and finance isn't your forte. So again, cash is king, and there's another statistic there. 83% of business failures cited poor cash management as a key factor. I would actually go so far as that probably close to 100% of business failures are as a result of poor cash management. So for me, cash flow is about timings. You've got to understand the difference between the profit and when you need to make these payments. So let's look at some very high level 5 key cash flow tips, which I'm going to run through on a one-by-one basis, but the 5 we'll look at will be up-to-date information, generally a 13-week rolling cash flow, focusing on receipts, focusing on payments, and looking at working capital facilities. So number 1, up-to-date information. For me, there's no excuse for this anymore. We have online accounting software, we have QuickBooks, we have Xero, we have things like FreeAgent, we have Sage. Everything can be done on a very regular basis. One of my mentors from 25 years ago taught me that if you do everything every day, you'll only ever be a day behind, which I thought was quite clever. So post your sales invoices every day, post your purchase invoices, do your bank reconciliation, stay on top of it. You know, do everything every day. You'll be only ever a day behind. Now you can do that either doing that through your internal team, or you can have a bookkeeper who comes in. Perhaps it's once a week, once a month. I would encourage it to be more, or you can outsource this. There's a lot of people who provide outsourced finance departments now, so there is absolutely no excuse for not having your financial information up to date. Second one, weekly rolling cash flow forecast. For me, this is the key to running a business. This can be something as simple as an Excel file, and I will show you one later, which is my free gift, or it can be done in an online system. Things like Dry Run or Float, they can integrate with your online software, and you will have all the information in there at your fingertips. For me, your cash flow should be updated daily, but as a minimum, I would suggest updating it on a weekly basis and focusing on the key dates and the payments that you can't move. These are things like salaries. Perhaps you need to pay your employees every Friday, or you pay them on the last day of the month. Your rent, where you need to pay your rent, perhaps you pay it quarterly in advance, perhaps you pay it every month. Or the taxes you need to pay, they could be payroll taxes, sales taxes, your corporate taxes. These are dates that you really can't move without getting yourself into trouble. So as a minimum, you factor these in first, and you then factor in the other payments after that. And normally you will factor suppliers in last as a balancing payment. And if you're looking out 13 weeks, if you find you've got a deficit, it gives you time to do something about it. You can go and speak to the bank. You can bring in some of your receipts quicker. You can delay some of your supplier payments. But if you don't forecast, you can wake up one morning and realize you have to pay the salaries that day and you've got no cash. By then, it's way too late. So number 3 is focusing on the receipts from your customers. So if you're invoicing daily, you can get your invoices out to your clients quicker. You should be able to collect that cash quicker from them as well, particularly if you've given them payment dates. So if you issue an invoice that says payments due during the last day of the month, or it's due in 7 days, or it's due on the 15th, whatever that may be, stay on top of it. Make sure you send reminders. You can send a reminder perhaps out a week before. You could send a reminder out 2 or 3 days before, and then you can follow up if it's late. Because I know in my experience of managing cash flow, if I get someone who's chasing me for cash, I'm more inclined to pay them than I am to pay the person who isn't chasing me for the cash, and I will delay that as long as I can. And the key is keep chasing that until you're paid. The other thing you can do to accelerate some of the cash is, if possible, ask your customers to perhaps pay a deposit up front, perhaps make stage payments as you do the work, perhaps get other payments on account as you're progressing the work. These all enhance your cash flow, because it's much better the cash sitting in your bank account than it is sitting in your customer's bank account. The other thing I would do is I would look in my accounting software and look at my aged debtors report. And your classic aged debtors report will have 30 days, 60 days, 90, and 120 plus. And for me, there should never be anything in the N3 columns that you don't know about or you're not dealing with. Fine, somebody's in the first 2 columns. These things happen. But anything out with that, you should be following up. There should be an action plan for each invoice, and someone should know about it, whether it's something that's been disputed, queried, or something we need to do internally. So have it all planned and have it down to the invoice by invoice detail. That doesn't matter whether you're turning over 10,000, 100,000 or 10 million. That can be done, and just make sure you collect it. It's your cash. And remember, a sale is not a sale until you actually collect the cash. So number 4 is payments to suppliers, employees, and the taxes you need to pay. So as we said before, your employees will have a set day that you have agreed to pay them. You really have very little flexibility with that. You need to make those payments on time. And similarly, your taxes, unless you want to get in trouble, you will have due dates when you need to pay your payroll tax, your sales tax, and your corporate tax. So for me, these should always be factored into your cash flow, and they should be kept in a separate account. So if you're collecting sales tax on behalf of the government, try and keep that separate from your normal business cash flow, because then it means you don't spend it and then you panic when you realize you need to pay that money out. On suppliers, speak to your suppliers regularly, try and negotiate extended credit terms. If you don't ask, you don't get. Tell them that you've got other suppliers you can go to. You know, if they can't give you an extra 15 days or an extra 30 days, then, you know, you may well move to another supplier. Similarly, when you're dealing with suppliers, be very, very honest with them. You know, if you're not going to make a payment on time, phone them and tell them, because they'll appreciate that. And don't tell them you're going to pay them when you aren't. Don't say, you know, I'll pay you by Friday. If you can't, definitely pay them. What you can say is, I'll try and pay you by Friday. And what I'll do is I'll either pay you on Friday or I'll call you on Friday and I'll let you know. But stay very, very close to them, and don't make promises that you can't keep. Final high-level tip for me is working capital facilities. So if you have a profitable business, if you've got up-to-date financial information, if you've got up-to-date forecasts, speak to your bank. Tell them you need a working capital facility. Banks want to engage with companies that have all of this information and profitable businesses that are growing. That's how they make money. Banks only make money by lending, and they want to lend to businesses like that. So speak to them. Arrange an overdraft. Sometimes overdrafts are more challenging. Certainly in the UK now, it's a lot more difficult to get an overdraft, but there's things like invoice finance and receivables finance that you can raise, and that can then allow you to fund the timescale between you making that sale and raising the invoice and to you collecting that invoice from your customer. The other point I'd make on banks as well, don't view the bank as someone who sits outside your business. View the bank as a partner. Keep the bank close to you. Share information. Keep them updated. Give them the good news. Tell them when things are going great. Tell them when you've made big sales or you get new contracts. But you've also got to share the bad news. So if something's delayed, if some additional costs come in, tell them what's happened. Don't just say, I've had a really bad problem, you know, disaster. Go to them and say, here's what's happened, here's why it's happened, here's what I'm doing about it. And for the next 2 or 3 weeks, I might need some more help. And if you can go to them with that plan, and they already know that you have good historic information, current information, and forecast information, they will support you. For me, that's key, and it then allows you to fund that gap between the timing of the customer invoices coming in. So, high-level summary: have up-to-date information, run your business on real time. There is absolutely no excuse that you can't have everything up to date. Have your rolling weekly cash flow forecast, as a minimum 13 weeks. I would tend to do it a bit longer than that. I would forecast out maybe till your next sales, when your next sales tax or VAT in the UK is due, and that can be 18-20 weeks, and update that regularly. Ask your customers for money they owe you. You know, many customers will not pay you till you chase them or till you stop providing services. So remember, it's your money. Ask them for it, and just again, be very honest with them. Suppliers, negotiate better terms if you can. Make sure you factor in timing, the timings of the payments to your employees and for your taxes. You know, you don't want to be late with that type of information. And in working capital facilities, I would encourage you to speak to your bank and provide all that information and have the facility there. Don't need to be using it all the time, but really just have it there as a safety net. So my gift, I'm going to share screen, Andre. If I've still got another couple of minutes, that would be handy just to run through this, and it will let people see the type of simple model and really see how easy this is to do. I'm not an Excel expert by any means, but this is a this is a very simple, reasonably crude spreadsheet that shows you put in the company name. I've got it set up for 13 weeks with the first week of your actual results from the previous week. So commencing as of next week, so you can start using this as of next week. And it's done on a very simple receipts and payments basis. So we have our customer receipts and any other cash that's coming in. We have our payments like suppliers, maybe checks you've issued, direct debits, salaries, credit card payments, and things like taxes. And the cells here in green are the ones you need to populate. The cells here in blue are the ones that flow through formulas and from some other tabs that I've got on the worksheet here. So you could break down your customer receipts by customer if you want to get detailed. You don't have to. You could basically override and just put the number in here. And similarly on suppliers, you can factor in what suppliers I need to pay and on what date, and that allows you to see that you stay within your overall facilities. And then for other monthly regular payments that come out of your bank automatically, we call them direct debits and standing orders in the UK, you can factor them in based on what date they come out. And for me, this is the tool to run the business. This is the key, because you can then work out here what's your surplus or your deficit. If you have an overdraft facility, you know, you could just put in what your overdraft facility is there, so it's £100,000. You then see what your surplus or deficit is on a weekly basis. And once this is populated, you'll be able to look out here 13 weeks and see, right, I stayed positive throughout all of that time, or perhaps we've got a deficit here in week commencing 15th of February. That gives you time to do something about it. So for me, information is key. Keeping it up to date, keeping it focused, and understanding exactly where you are. So we're almost there. I'm just going to close off with the last couple of slides, if my machine will let me. So in summary, remember, profit and cash are different. You can be making a profit, but you may have no cash, and if you don't have cash, you're not here, because you can't pay your bills without cash. Remember the statistics I said earlier. Many profitable businesses can still go bust. Up-to-date information. There is no excuse. I don't think there's anyone today who could give me an excuse for not having current and up-to-date information. Know where you've been, know where you are, and know where you're going. And if you do that, you will sleep much better at night. You will also be able to bring in investors and banks into your business, because they want to work with people who have good businesses, have good plans, and have great financial information. It's up to you how often you monitor your cash. For me, it's a daily thing. You know, I've been in situations where I was doing cash flows on an almost hourly basis in some situations that were fairly intense turnaround situations. But for most businesses, do it daily. Log on to your bank first thing in the morning, or whoever deals with the bank, log on first thing in the morning, update the bank position and update your forecast. It's really, really easy. Once you've invested a bit of time in getting your 13-week model, it's very easy. You drop 1 week off every month and you add another week. You do every week. Yeah, you do that on the Monday of every week, and make sure you keep everything up to date. And I'm quite breathless because it's difficult to master cash flow in 15 minutes. So I'm happy to take any questions that Andrew wants to throw at me.
Thank you, Greg. Actually, you did it in 15 minutes. Amazing. And you made me think about all of what we tell the business owners. Maybe you are having a profitable business, but it's not valuable. And when we talk about valuable business, it needs to be one of the things, because you're talking about cash flow now here. It needs to generate cash in order to run the business without injecting cash from outside. And we always talk about whenever someone wants to acquire your business, he will pay one check for the business, and if you don't have good cash flow, they will pay another check to run the business, to inject.
Correct, for the working capital, absolutely. And the more working capital you need in the business, the less your business is valued, because as you see, Andre, you've got to write two checks, or the acquirer has to write 2 checks. Yeah, for me, cash flow's always been easy. Because, you know, you just got to focus on cash, because for me, business is all about focusing on cash. There's no point selling something if you're not going to collect the cash for it, and there's no reason why you can't collect that cash quickly. If you've sold the product, if you've provided the service, ask for the cash. It's only fair.
Great. And one of our activities, we always ask, how can you pay? How can you invoice earlier and get your cash earlier? And how can you pay later on or by installments, so you can keep cash in the business for the working capital and running budget of your business?
Absolutely,
Great.
and that goes back to the thing I said at the start. If you do everything every day, you're only ever a day behind. So raise your invoices every day, send them out, you know, process your purchase invoices, do your buying reconciliations, and speak to your suppliers. I mean, remember, suppliers are desperate for work and desperate for ongoing trade. Tell them you need better terms, and you may want to not necessarily negotiate cheaper prices, because it could be even better for you by saying, right, give me an extra couple of weeks to pay, or an extra 30 days. That's often as valuable as having a couple of % knocked off the price.
Thank you, Greg. Let's see some thumbs ups in the comments of this video for Greg. Thank you for joining us as a value builder, as an expert. You gave us a lot of value now for business owners and entrepreneurs to manage their cash. And I hope it gets warmer in Scotland for you.
it very rarely gets warmer in Scotland, but that's okay. We're used to it. We know what to expect.
Thank you, Greg.
Thank you for having me, Andre. Good luck, everyone.
Thank you. Have a great evening.